For the first time since ChatGPT launched, the AI trade has split in two. Charlie McElligott at Nomura just put a label on what we have been watching all week. The hyperscalers are funding shorts now, meaning they are the source of capital the rest of the market is raising against, down 16.4% since the end of May. Meanwhile, the AI enablers, the chip makers and memory and networking suppliers, are up 60.9% since the March 30th rally. That is 77 percentage points of dispersion between the two halves of what used to be one trade. In 3 months. Funding short has a specific meaning on the desk. It refers to a position the market sells to fund buying somewhere else. Google, Amazon, Meta, Microsoft, and Oracle are the names everyone has owned for 2 years, and they have quietly become the source of cash for whatever the new long is. That is a role change, and it happened in about 7 months without anyone calling it out by name. Until today, the hyperscaler basket has not outperformed the equal weight S&P 500 since October 2025. That is 9 straight months of underperformance from the names that carried this index for 2 years before. The index is now grinding forward without them, which is something we have not seen in this cycle. What makes McElligott's note different from the rest of the street this week is that he is making a supply-side argument. The hyperscalers are burning cash on AI capex, they are taking on debt to fund it, and they are issuing equity by selling calls on their own shares. That last piece matters most. It is more supply hitting the float at a time when fewer buyers are willing to step up at these prices. The bear case here is not about valuation. It is about plumbing. The macro just shifted in their favor, and they are still bleeding. PCE inflation came in softer than expected this morning. CT, as are buying back their legacy bond and rate shorts, and peak hawkishness is behind us. On paper, this should have been a duration relief rally for megacap. It was not. When the macro cooperates and the stock keeps falling, the seller is not the macro. The trade McElligott is pointing at is a clean pair. Long the AI enablers, short the hyperscalers, both legs already moving. The bet is that the dispersion extends another 10 to 20 percentage points before consensus catches on and the pair gets crowded. The risk is that megacap finds a floor on capitulation buying and the spread snaps shut in a week. Daily synthesis of what the big banks and Wall Street quants are seeing. Follow.